Now, would you say that banks on the continent have adapted to the challenges brought on by the COVID-19 pandemic?
In a short answer, no.
No.
They're adapting. I don't think they've adapted. I would put the challenge basically in the context of a train station. So if you imagine the rail network as financial services and banks as the train stations, people pass through those train stations every day, and they're in the process of essentially adapting and renovating the tickets, right? Going from actually going to print out the tickets to, using a smartphone or, contactless or whatever it might be. That's obviously very difficult when people still need to move and still need to be in transit. And it is a journey. They have made great strides. I wouldn't discount it, but the journey's definitely far from over.
Now, just looking at 2020 and, banks having to innovate due to circumstances and the disruptions brought on by COVID-19, the banking sector was not really spared, suffering a surge in non-performing loans and a plunge in profitability.
And I do think it's a symptom of something that we don't often think about. But, Lulu, if I was to ask you a question, do you like your bank? You don't need to tell me who it is, but if I say, do you like them?
Generally, people will tell you no.
But they do trust them to a large extent. And I think at the moment, if I look at, where across Africa as a whole, where consumers put their trust, they put it in banks, but their money tends to go into other platforms, whether that is, foreign exchange platforms, mobile money movement platforms, or whatever it might be, simply because they like using that service a lot more. So I think as banks basically start acquiring more of these customers, they're actually acquiring a few good things, which can help with things like NPL, as well as other ratios. They're acquiring more data about their customers, which will allow them to make better financial decisions with their customers. But with that, they're acquiring a greater base of trust, and they need to not abuse that trust and actually find a digital solution to engage with their customers in a savvy and helpful way, because ultimately that's what we want, right? When you go to a bank, you don't go there saying, I'm going to move my money or I'm going to buy a loan. That's the secondary objective. The primary objective is, my son needs help at university, so I'm going to send him money. Or, my bathroom is leaking. I need to plug that gap. I need a home loan or whatever it might be to fix it. So I think getting those customers in is fantastic. I think that's a very good step. And clearly they show a preference for digital. I mean, who wants to go into a very touchy, high contact environment at the moment. But nevertheless, we need to make sure that we use that new customer base and we use the trust that they've given to us into a way that they can actually love banking with us as an industry.
Now, going back in late March, where McKinsey reported that an average return of equity for African banks had fallen to 7% last year, which was in 2020. This was from 14% in 2019. Now, which is at least much better than their counterparts in developed markets, so to speak, where McKinsey estimated that an average of ROE could dip below 1.5% in 2021. Now, the rebound for Africa's banking industry could be swift, and it could return to near pre-crisis levels within the next 3 years. This is what they're putting out there. Is this a possibility? Are you surprised at this, or is this just a thumb suck?
No, I do think that there's definitely space for a lot of the banks to return to quote unquote normality, whatever that might mean. Nevertheless, what I think the last year and a bit has really exposed is the flaws in the systems. So, ROE did take a hit for a lot of banks globally. But even before then, I think Africa was a bit of an anomaly, because looking at, their global counterparts, ROE is flatlined actually for, I think the best part of a decade at least. And a lot of the reasons there's flaws in the system which maybe weren't so noticeable when, there wasn't a pandemic. I'll give you a case in point, and that's very simple things like, being able to make very simple changes to your own personal, information with many banks across the globe, not just here in on the continent. But to do that, quite often, it's a very broken journey, right? You try and do it on mobile, it doesn't work. You try and go into your internet banking, you can do it partially, but something happens and it doesn't reflect properly. So you end up having to go into the branch. And all of those breaks in the system and all of that friction for myself or yourself as a customer creates additional cost overhead for the banks. And I think the last 18 months or so has really put a spotlight on those problems. And to your point, I do think the banks that really focus on fixing those issues at root and really looking at the bigger picture will be able to bounce back. Those that think everything will be okay, let's say continue business as usual without addressing any of these root problems, with all of their new digital customers, will basically find that they'll lose them very quickly to those that are fixing it or have fixed it. And I think more long term, they will still be around for a few years, but they will just slowly go into irrelevance.
Now, Cornel, several banks have reported double-digit growth on digital active users. We've touched on that, digital money transactions and internet banking services. And, you've just gone through something that we don't really generally think about, where the frustration of not being able to finish a transaction digitally, and a person has to go into the branch. Do you think, or do you see the continent transforming its banking on a continuous basis? Because now this is the new norm. I think this is how life is going to be going forward for the next couple of years.
Yeah, 100%. And ultimately, it benefits everybody, right? I mean, if you're able to, fix a problem, and that's ultimately why people, go to banks. They have a problem and they're looking for a solution, a financial one, but a solution nevertheless. So at the end of the day, if they focus on fixing those problems, they will be able to keep those users. I think the worst thing in the world is attracting all of those users. So let's say you get 1 million new digital active users. Fantastic. Great job. I think very good marketing and very good fact that you got them in. But then what happens in a year's time when they start getting frustrated, you start getting bad reviews, and because you've attracted all those millions of customers, the effect actually compounds. So I really do think that there's a big change in consumer preference, which has happened very quickly. I mean, let's not discount that, right? Almost overnight. But it's not like the solutions and the ways of working and everything along those lines that banks need to use don't exist. They do. They're out there in the market. There's very smart people on continent. But at the end of the day, I was speaking with a banker, and he was saying, he's facing, up to 60 or 70% of his transactions, especially in the small enterprise sector. This is over in East Africa. Were physical transactions that are being done in branch. And he was explaining how much it was costing him. And in my mind, I was thinking, think about that poor enterprise owner, that poor sole proprietor or entrepreneur who's having to lug his cash and do his, bookkeeping and stuff at the bank every day or every week or whatever it might be. That's the problem we need to fix. Make his or her life a lot easier, and then the rest will be easy.
I guess it's innovation, innovation, innovation.
100%. And I really, book of the year for me, well, probably last year actually when it came out, was by Robert Iger, the former CEO of Disney. Actually, no, still current CEO of Disney. And he has a whole chapter on Innovate or Die and the parallels between the media industry and what was happening there about 10 years ago and what's currently happening in the financial services industry is scary. And it is very true. Innovate, innovate, innovate.